All right. Hey, good morning. Como allez-vous? How are you? It is 6:31 on Wall Street, 3 hours before the open of trading, and it's time to get our global macro on and uncover the best fundamental trading opportunities across our global markets. What we call QuantBox Live. Very cool. So, what we want to do is look at all the different parts of the economy in all the economies around the world and then do comparative analysis to see which one is stronger than the others, maybe even find the most strong versus the most weak, and then pair them together for the best most likely outcome. But when you look at long-term data, it tells you what should be, but we also know that things change or sometimes things are irrational, so we also have to look at market sentiment to find out what the market's actually doing today. Because what should be may not be actually our reality. So we have to look at the big picture, we have to look at the micro picture, we have to put them all together and make investment decisions. And from that, you will know not just what to invest in, but also know which assets that you can let run. Remember, the secret sauce to trading and investing is letting your winners run. Well, if you don't know what the underlying intrinsic trend is, then how could you possibly catch that trend? QuantBox makes that easy, fun. It also helps you lose weight and look taller to other people. Well, maybe not the last two things. But anywho, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Bada bing, bada boom. Log into QuantBox, go to the Pro. Uh, 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 Log into the database. Cool. Yields are up, not good. Oil's down. Well, if you're trying to buy a dip, well, it's dipping. Gold still hanging in there, but it wants to cross 2,400, maybe on its way to 2,500. Somebody this morning, one of the big banks, I can't remember which one, said that they think it's going to go to 3,000, which is another way of just simply saying inflation's going to remain persistent. Okay. So that's what the bank is thinking. Again, I don't remember which one, but it doesn't matter. But so, well, if you go along with that point of view, then you want to be in the business of buying dips. S&P 500 down. I think the European stock markets were down today as well. So, big down day. Okay. Euro, whoa, 106. Oh my gosh, it was 109 last week. So it's Oscar Mike on the move. And Bitcoin down again. Okay. Again, think about this like Thursday or Friday of last week. This was above 70, and now we're down to 60,000. And you can see the global stock markets here. Let me zoom in a little bit. La, la, la. Okay. Japanese stock market flat. S&P 500 down. DAX is down. Wait, what? FTSE's actually up a little bit? Huh. How weird is that? As right, Dow was in there a little bit too. So, most things are coming down except that little footsie. Huh, interesting. Well, let's go to the risk gauges and see what's what. Definitely a risk off underlying intrinsic trend. We went weeks and weeks and weeks and weeks and weeks without any trend at all. It's definitely risk off. Okay, definitely risk off and becoming more and more so. Typically, in that scenario, you're looking to buy dollar, you're looking to buy yen, and you're looking to buy Swiss franc. Doesn't mean you just immediately do it, but that makes sense. So when the S&P 500 is falling, you're typically buying dollar. Cool, right? Looking at the longer term, okay, S&P 500 has fallen 1% this month. That's bad. Yen is weak this month. That's good. But maybe that's changing, huh? We'll find out. That's what you want to look for. That's how you use these gauges. Maybe that's going to change. Yields are up in the United States quite a bit month over month. That's bad. Dollar is strong this month. That's bad. Gold is up. That's bad. Why? People are buying gold because we have persistent inflation. Well, that's bad, isn't it? Yeah. VIX, look at the VIX volatility way up month over month. That's bad. Bad. Cool. Well, now you know. So hopefully you're not like what most people were doing the previous 5 weeks. Most people I would imagine, over trading the previous 5 weeks when there was no underlying intrinsic trend. Now there is. Okay. This is now when you deploy your dry powder and get involved into the fight. Cool. Scatter plot, Bitcoin, yep, way down. I'm so glad I got out of that. Let's get rid of that. And we have Japanese stock market down. Oh, look, the Russell down. FTSE down today or overnight. Copper down. Okay, but I want to stick. Let's just do the indices. That's really what I was doing. Okay. NASI down a little bit, Dow down more, S&P 500 down more, DAX, Russell, and FTSE down, and down the most, the Japanese stock market. And that's when Japanese yen gets strong, by the way. Okay. Risk off. What does that mean? Means Japanese investors that had their money overseas want to bring it home because things are bad. So, anyways, you might look for yen strength. Interesting. Yep. And was everything under here? I can't even see it. Platinum, oil, silver, gold, copper. Okay. Most things are down except gold. These are all very bullish. Remember, when you have persistent underlying inflation, you don't want to own financial assets. Okay. For example, my 20-year treasury investment is not doing well right now. Why? Well, I'm earning 5%, but inflation is high, which diminishes the value of this. So in real terms, maybe I'm only earning 1%. Huh. But a bar of gold is a bar of gold. So, anyways, um, so typically you buy real estate, for example, if you have lots of inflation. Okay. Okay. A house 50 years from now is still going to be a livable house. Okay. Your bonds probably will have matured. So, anyways, um, more asset classes on here. I hope you appreciate that. And then when we look at this scatter plot, do you see a trend? No, not really. Not amongst them all. You really kind of have to break it down into like more digestible pieces. Um, what do we see? Pound is pound, 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 pound. Any pound down here? So pound is reasonably strong today, about the same as euro. Kiwi down, Kiwi down, Kiwi down, Aussie down, Aussie, Aussie. Do you remember talking about commodity currencies yesterday? I asked you to pay attention to the news out of China and that it would likely impact commodity currencies, in particular Aussie and Kiwi. Well, Kiwi is weak, Kiwi is weak, Aussie is weak, Kiwi is weak, Aussie is weak, Aussie is weak, and Aussie is weak. Up here, Aussie is weak, Kiwi is weak, Aussie is weak. What do you think about that? Yeah. Okay. So definitely something happened. And yeah, Chinese industrial production. But remember, there was CPI and GDP and all that. But, we're interested in where are the factories in China booming? It was 7. People expected 6. They got 4.5. Kiwi down, Aussie down. You're welcome. Okay, so we got Canadian CPI coming up this morning. And then this afternoon, New Zealand CPI. And they expect inflation going up, which is not good. And if they have a weakened currency, then you need more currency to buy the stuff you used to buy, which is inflationary. Huh? We call that a vicious cycle because then maybe that weakens the currency further, which means you need more currency, which means inflation is high, so anyways. Tomorrow, right? London Open, CPI out of the UK. And then tomorrow night, okay? Aussie, Aussie, Aussie. Okay, Aussie jobs. So we've been blessed with a great trading week with just enough volatility to keep things moving. Okay. What do you think? Look bearish? What? I can't even get rid of it. Loaded after, didn't it? Anyways, I guess we're not going to use this today. Notice on oil that we're on the daily average. So maybe today is a buy the dip. I just wanted to show this and very bullish, very bullish. What specifically is creating this error? That's the Looker cannot connect to your data set for what though? I think that's just the disclaimer having an error. Too bad I can't get rid of it. Oh, and then here, I guess that's what's doing it. Okay. Well, as you can see, we're doing lots of upgrades. Another thing I did want to look at today, we looked at copper yesterday. Okay, and we can look at gold today. Okay. Gold right? We had a little dip. And then in here, you can see there's still some potential upside for gold seasonally. Okay. The big thing, of course, is not the seasonality. It's the fact that we have inflation. And I hope I really drilled this home over the last 2 or 3 years, because gold is understood as an inflation hedge. Great. But most people screwed it all up for the last 2 years. They bought gold after inflation went up. And they were buying gold because they're like, wow, we have 6% inflation. Yeah, well, it used to be 10, and then it was 9, and then it was 8, and then it was 7, then it was 6, then it was 5, then it was 4, then it was you don't buy gold in a scenario like that. And this last rally started on the day CPI about 2 months ago came out higher than expected. Then the following month was higher than expected. Now this month higher than expected, and gold is going up from 2,000 to 2,400 and maybe beyond, as long as inflation is going up. You buy it when inflation is going up, not after it's occurred. Okay? You don't, well, I was going to give an analogy, and then I realized it was horrific. So, anyways, so no, I won't do the analogy, but uh, yeah. Anyways, so you don't buy it after the fact. Okay, you don't buy it after the fact. You buy it during. So as long as inflation continues to go up and not down, and then this move here is not going to get in the way. That's how you want to look at seasonality. Okay. Okay. It's nice, right? So we just kind of we got wind in our sails is all. Nothing's going to get in our way. So you can do that for all these assets. Do 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 do. Mm, 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 mm. I'm just realigning my satellites. Okay. So we were above 52, or where are we now? 153, 154, pretty high. Notice that this very often changes about now. You might want to pay attention to that, but the dollar is strong right now, right? So, like pound dollar, look how choppy it can be throughout the year. Euro dollar's cleaner. Usually it kind of goes up this time of year until about summer, but boom, dollar strong. That's that. Dollar strong. Okay. Dollar strong. USD CAD usually goes the other way. Dollar weakens because we are usually in a risk on mode. But this year is different. That's that. Seasonality is seasonality. It doesn't know the central bank is kind of betraying everybody, or at least that's the perception, right? Yeah, that would be not average. Okay. Also, the politics. Okay. So, anyways, and the geopolitical, right? Anyways, just kind of get a catch up. What else is kind of going on? USD Kitty Cat is ripper strong. Okay. We have metal, metal, metal. Okay. Commodities do well in periods of high inflation. Copper doing okay. Okay. And Bitcoin down this week. Look at this. Now we're below 62,000. Down 13.57% this week. down $4,633 today. Russell down. Okay, these are small companies, small cap companies. Why are they down a lot? Well, these are the ones that have to pay more for financing. Okay? Big big companies in the Nasdaq, for example, or the S&P 500, they can get financing from their banks at probably a prime rate. And it's easy for them. They go to the bank, they got 10 banks lined up to offer them financing. And if they choose not to go to a bank, they could just issue a bond into the bond market. Not a big deal because they're a bigger company. They can also borrow either through bank financing or the bond market bigger quantities of money. So if you're borrowing $1 billion, but it costs you $10 million to issue a bond, issuing a bond is expensive. I don't know if 10 million, maybe 10 million is too much. Maybe it's 800,000 to create a bond with your investment banking team. Okay. But to a small company, that's too much. It's just they don't have that kind of money on as another cost because they're not borrowing that much. So, anyway, these companies, the smaller cap companies, really need the Fed to cut interest rates to get those borrowing costs down because borrowing money is a normal part of doing business. Oh, you want to make some widgets? Sounds good. You got $1 million order in the future to produce widgets? Great. You need to buy a widget machine? How much is a widget machine? $1 million. So you have to have $1 million machine before you can even start making widgets. Uh-huh. Well, the idea is you finance that, right? Easy. Easy peasy lemon squeezy. So, well, if we're not getting cuts, those companies are being hurt. And it's nice to see, I suppose. It's not good, but for us to be able to see that and like, okay, that's the cost of financing. The cost of financing is not coming down. It hurts. Okay. It's similar to like the cost of the dollar. If it's strong, that's going to hurt emerging markets more. But if the Fed funds rate is cut, that helps emerging markets because much of their debt is in dollar. Okay. So right. So, anyways, it's nice to have these additional assets in there and just see there. And then I guess just the FTSE was such a laggard this year. I guess I don't know. Somebody wants to own it now. Really? Oil is down, but this might be your buy the dip scenario. I don't know. I don't know. What do you want to do? Okay, so like I showed here, if you are a bull, you're looking for opportunities to buy a dip at support, right? We're at 85. That's what 85 is, the 20-day simple moving average. So what's your plan? That's the base case if you're still a bull. Couple of things are breaking, huh? We need some new duct tape. Oh, QuantBox is so complicated in the what you can't see going on is so complicated. So, anyways, it's funny, just like, yeah. So we need more duct tape, is what I'm saying. Retail still very long. Institutional still very long. Okay, dollar 50/50 because oil's priced in dollars, right? But still institutional and retail very long in this thing. Seasonally, we have up this time of year. Okay, cool. Peaks around June. Good. So we still got time, is all I'm saying. And well, that doesn't seem to be working. All right. One of those days, huh? It's one of those days. Oh, that's a little mixed, huh? Ooh, that's a. Oh, look at this 50-50. Institutional is very long. Retail is 50-50. That's interesting. I want to see that. Yeah, there it is. So this gets pulled from liquidity partners. So Ethereum, retail's very interested in owning Ethereum. Platinum. Kiwi Swissy. What? That's a terrible currency pair. Yeah. Yeah. Right now it's risk off. That would I look, I'm a bear on the Kiwi. And we have a Swiss national bank with a policy that would weaken the Swiss franc. But okay, but that wouldn't be the pair to be long on. But in our current market conditions, which might actually be stubbornly persistent for several months, money is flowing to Switzerland as a safe haven. We make this a dumb trade. Too bad retail. So I'd look at that and like I'd trade against retail. Wow, they're that long, huh? You gonna stop hunt? Do some stop hunting? Remember when you used to complain all those years ago that your broker is hunting your stops? Yeah. Never happened. Okay. Or you don't know how to choose a broker. But, anyways, let's go back to now. Now you're the boss. You should be hunting retail stops. And you look at that and you're like, dude, they're wrong. There's no doubt about that. These guys are wrong. So you open up your Kiwi Swiss franc. And in this mode, the more you get opportunities to sell, it'll drop because retail is going to get out of this. Remember, the way I look at it, like the common notion is retail's dumb money. I look at it as short-term money. So all their stops are closed. So if anything's going to fall fast, it probably would be Kiwi Swissy. So you'll short and hit their stops, which it'll make it'll fall, which hit more stops, which will make it fall, which will hit more stops, and you get the cascading effect. Okay. Okay. Institutional are 60% short small stocks, 55% short S&P 500, which is balanced. 50-50 on the NASDAQ. Ooh, you like nobody's long anymore. Oh my God. I hope you're really looking at this stuff. People are still interested, or institutions are still interested in gold and oil. Okay. You could see interest in metals. And this is industrial. I suppose platinum is as well. Huh? Where do you get platinum? Catalytic converters. Anywho, interesting. Okay. Still very short yen, still very long the Japanese stock market. I think that's come to an end as well. One point, and I learned this from someone named Larry Williams. I co-authored a book many years ago with, not he and I, but there was like, I don't know, I'm looking at the book cover there, a dozen, dozen other traders that were in this book, anyways, and he was one of the other authors. But I learned from him when I was studying the Commitment of Traders report. Now, like, golly, 18, 20 years ago. He was already old. And he had earned his shtick in the trading and investing world um, with the Commitment of Traders report. And he won a bunch of trading contests. And then he taught his kid how to trade. And then his kid won trading contests. So it was really good, right? And he's like, it's all about um, Commitment to Traders report. The part that I didn't like about it was that he would say, like, you know, let's say oil, you sell it in July. Wait, what? You're like, well, when and how and like at what price and what technique? No, that's the top of the market. So you sell it and you come back in like February. You're like, what? It was just so broad. Oh, you might be down 30% while it sets up, but eventually, right? And so, anyways, it was very, if you think about it, like really, it tuned toward, let's say, more institutional investing. And you have to understand, like 20 years ago, my primary mechanism of profiting in the foreign exchange market, scalping and sort of day trading. So I'm like, what do you mean sell in July and come back in February? You know, but now I get it. So what he means by this is that the market can get very, very toppy. So like right now, okay, the institutional market, nobody cares about retail. These guys you trade against. In particular, if these guys are long and these guys are short. I think what inevitably happens is eventually retail agrees with institutional, so then institutional gets out. Okay, because they sell their positions to these guys, right? So, anyways, you look at the Japanese yen, or sorry, the Japanese stock market. Okay, very, very, very long, and then we'll go down here. So let's redo this. Delete. Okay, and I'll actually do this way. Okay, good. So okay, very, 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 very long the Japanese stock market, very, 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 very short the Japanese yen, which makes sense. That's actually normal, but it's extreme. And we have changing winds, let's say. And then you might want to look at some seasonality, okay, and look at that, right, for yen pairs or the Japanese stock market if we have it. And at some point, it's at peak. Everybody's long. And then what you want to do, and this is what Larry Williams pointed out, is that at some point it doesn't go higher. And then what has been going up for months will come down for months. And that's how you want to very often the COT data, because newer traders will say, it's lagging, it's updated once a week, it doesn't reflect what's happening this week. Well, that might be true, but it could reflect what's going to happen in the next 6 months. So if you trade a 15-minute chart, then who cares, right? If that's all you look at, then you're right, who cares? But wouldn't you like to know that what if this, okay, what if this over time is coming down and this is coming up? Well, those are long trends. And of course, if you can catch that, those are your let the winner run scenarios. We might be at peak. Okay. And so now you go to your chart, and if you saw yen's doing, they were going up because that makes sense. If the stock market's going up, the Japanese yen's going down. But what do you do if that changes and you get a scenario like this? That's a whole new trend in a whole new direction, likely to last months as institutional investors. I mean, think about what are they doing? If retail finally catches up and they're like, oh, I need the Japanese stock market. Oh, I should be shorting the yen. Good. These guys are selling it to these suckers and walking away. Sorry. Oh, which book? It's called The Wily Trading Guide. Here, I'll show you. Ooh, I framed it. So Wiley Publishing took their most popular. There's the authors. I know you can't quite see, but Wiley took their most popular authors and then put a book together. Anyways. All right. So, anyways, cool. Cool. Anyways, neato. Just, I want to go back to the scatter plot. I know we already did it, but I'm just, who's strong? So, like, here's one. Let's just do a quick review at how to look at this. Where's my drawing tool? There we go. All right. So you want to look at Euro Aussie, and it's got a score of, I guess that's 3. And it's producing today. Okay. It's one of the highest producers, and it's got a decent score. Okay. Euro Kiwi is very, very, very bullish and producing quite well. Okay. Euro Yen, score 4 and producing quite well. Okay. Okay. Euro dollar, QuantBox expects it to be down, but it's producing today. Does it seem like Euro might be strong? Euro Swissy has a score of 2, producing. Okay. Euro pound neutral and producing. Okay. So this is right. This is how you're supposed to be analyzing all of this. And you're like, okay, Euro is strong today. Uh-huh. Okay. In particular, you want to look at the ones with the highest probability. The higher these numbers, the more likely they're up. So this is the most obvious one. Oops. I thought I had my drawing tool. Delete. Okay. Kiwi. No, still don't have my drawing tool. Come on now. Good. All right. Kiwi is the most what this morning was the most likely. I don't know what's going on. What's going on? Let me get back. Anyways, Kiwi is most likely to have performed, followed by Euro Yen and Euro Aussie. Okay. We knew that those scores have been like that for a while. And so here's one that I took last night. Euro Aussie. It's an okay trade. As you know, you were probably better off on Euro Kiwi. Okay. And now it's producing. My stop's at break even, but I could lock in some profit if I wanted to. And now the next new opportunity for the day is probably here somewhere at that price later today or tomorrow. Now, Denise says she's been in this trade because of the TRADARS email. Yeah, that's why I took this trade too. So QuantBox said you should be long Euro Aussie and Euro Kiwi, and TRADARS said it's breaking out and going up. So I combined the two. I spent about 6 seconds thinking about it, and like you said, you wake up the next day and you're like, "Oh, look at that, 135 pips." So we have two AIs and a set of gray matter in between. Good. Fundamentals, technical, trader psychology. Nice. It's nice to be a one person complete team. I have a complete team. I have a technical analyst, I have a fundamental analyst, and all I have to do is trade. Yeah, cool. So that is one. But remember, Box also said, do we have one over here? No, let's move it. Pay attention to Euro Kiwi. Euro Kiwi, we go to an hourly chart. Okay. And QuantBox has told you about this for a while. And it says this is way better than Euro Aussie. Well, not way better, but I think Aussie was a 3 and this is what, an 8 or something? Cool. Look at all the ops. A lot of opportunities. Okay. Down, 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 up, sell. Down, 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 up, sell. Down, up, buy. Up, buy. Right? And all these micro ones in here. Okay. Up, buy. Up, buy. What do you think the future is going to look like? Something like that? Well, QuantBox is screaming at you that this is an opportunity. So now you need to do your technical analysis. Are you going to buy a dip on a roll reversal? Or is that pivot going to be a problem? I don't know. I don't know. It doesn't know. It's your job. Okay. So, yeah. And where's it going? Well, we can back out a little further. And if you look at the monthly swing here, and notice how straightforward this is. Me. I mean, dude, that is basic technical analysis, basic price action. Up, down, and that would be the target. 183. Okay. Basic. And I would hope, because of QuantBox, you're seeing these set up. You're not just doing what you used to do. You set things up fundamentally first, and then you go to your charts, and you're like, dude, that's an easy swing trade. Little roll reversal off of a monthly M2. Great. Pick it up at 78 and a half, and we're going to 183. That's your whole month planned in advance. Okay. And now, if suddenly you're getting messages from, from TRADARS saying, hey, man, Euro Kiwi's breaking out to the upside. You're like, good, because I'm a bull. So you're a bull because of QuantBox, and you're buying dips because of TRADARS. Oh, my goodness. Right? You're unbelievable. But wait. Yeah, we got a challenge here for sure. Now, if you're a bull, you don't care about that. We're breaking it. That's your plan. But if it collapses, it's meaningful. Why is it meaningful? There's only two prices you care about as a bull on this chart. This price and this price. So if it collapses there, yeah, you're going to get knocked out of break even. But you're a bull. You're like, dude, I'm not going to get knocked out of break even. Golly gee whiz, Batman. Okay. There's the buy zone. There's the exit. There's the buy zone. There's the exit. I mean, dude, it's right. You have to be right. Nobody likes a weak bull. Okay. Nobody likes a weak bull. You're either right. You're either a strong bull or you're neutral. Even Ferdinand the bull, who would sit by the cork tree and smell the flowers. Oh, but he was strong. You have to read that story. All right. So, anyways, I got to go. You got to go. We got a big, busy morning. So, that's that. Peace on earth. May the pips be with you. May your profits be above average. Let's get on with it. We got a big day. See you at Forex.today. Cheers.